Hello, today is Monday, the 14th of April, 2008. This is Brian Shannon from alphatrends.net. The S&P 500 lost 56 cents today, or 0.42%. You can see here that it's just kind of blown through that 50-day moving average, and now we've got our second close below that after spending about a week and a half above that level. It's looking like this market is coming back down towards this trend line, and that doesn't mean it's going to hold this market up. It's just kind of more of an interesting fact than anything. With these lows right here are looming right now in the daily time frame at about 131. Breaking below there, I think that we could probably go back and retest these lows once again, and who knows what happens after that. Let's just concentrate for now on the shorter term levels. When we look at the 30-minute time frame, you'll see here that last week we started seeing this pattern of lower highs and lower lows develop, and that continues to be the case here today, as we saw one little rally attempt got squashed, and the market came down to this level here, which has been but is basically the prior high from where we had that gap occur on at the beginning of the month. So those monthly gains are rapidly deteriorating, and while the market does hold on for now to it, as I pointed out this weekend on a chart I had posted, the average price since there, when we take a VWAP and go straight across, is significantly higher. The average price since April 1st is actually about 135.95. So the most participants, at least those who've established positions since this rally began, are in that familiar losing position that, and I mean familiar to the long holders for basically most of this year. When we look at the average price that the S&P 500 is traded at this year with this VWAP, you can see that, again, that's right up around that 135 level, and that means that the average person who's been involved in the S&P 500 this year is losing money. So looking at a weekly time frame, again, no evidence of a bottom yet, possibly a bottoming process with these with this level of support that has been found at 126 twice. If it goes back down there, it has the potential to be support again. But remember, the more time support is tested in a downtrend, the more likely it is to fail to hold, and that lower lows will likely be the more likely scenario that is. So there's that trend line that we broke last week as well. As far as potential support levels go, 126 is too far away to really take seriously for now. But this level here at the 131, that's going to be an important level going forward. And now if we want to see this market turn back higher again, it's still got a lot of work to do. We still need to see this 5-day moving average begin to flatten out before we can trust anything. For tomorrow's session, I think that maybe above 133.70, maybe we get a little bit further short squeeze action just intraday. But we've got these levels up here where 135 is now going to be important, not only on the bigger picture where we have the location of the 50-day moving average and the average price for the year, but here we see that this prior level of support here did turn into resistance last Friday, and that will probably be a hard-fought area if the market can rally up towards that level. So the fact remains we're in a downtrend here short-term, and there's no reason to try and fight that momentum, as it usually does result in losses. The Russell 2000 lost 25 cents today. Same picture here on the 10-minute time frame, where we've got these lower highs and lower lows, and this market just continues to deteriorate underneath a declining 5-day moving average. Potential levels of support, we could look at the lows from last day of March right in here at about $68 a share, and of course the where we are right now, actually the 68.5 to 69 level has been an important level for this market over the last month and a half or so. So I think that we're heading into an area where we have the potential to maybe stabilize, but as long as this 5-day moving average is declining, you don't want to really trust these rallies, and you have the possibility that maybe this market builds a shoulder. Here we've got a left shoulder potentially ahead, and then maybe it builds a right shoulder. So that's just something to be aware of potentially. Obviously, if the market rallies to 70 to create a right shoulder, that would be a great little rally here for shorter-term traders to take advantage of. And looking at the 1-minute time frame, the market did try to recover today, but late in the day it came down, tested that VWAP, and then broke through it, and then we had the resumption of these lower highs and lower lows right into the close here today. The biggest area of concern for this market remains the very weak financial index. And again, these news and headlines, we've got some of the financial companies reported earnings, will be reporting earnings. There was one today. We've got Merrill Lynch. I think we've got JP Morgan as well. We might get some emotional movement based on that, but, the emotional moves tend to get to not be able to hold that, as I'm trying to say, when we have a primary downtrend. That is, if they gap higher, they tend not to hold, or at least maybe they hold for a couple days, but they have a high failure rate. And this level right here, 2440-ish area, has been an important level, and it's basically pretty much 2430, 2440. That's basically our January lows and where we saw lows late last month. Now the market is trying to stabilize in here, but it doesn't look very convincing. I don't really think that there's any reason definitely to be a buyer in this area. To me, buying in here at potential support is just gambling. When you have the primary trend clearly lower like it is here, it's it's a low probability bet, and if you're going to take those types of trades, I think that, the low probability, high risk trades, then you want to use options. And that's what I was talking about as far as some of the earnings reports. I don't recommend, trading long in here. Clearly, the path of least resistance still is lower. And it's possible that, what if we get bad news from Merrill Lynch or JP Morgan or whatever? Is that going to be the catalyst that turns this market back around to the upside? In other words, does all the bad news come out at the bottom and people, shorts start covering into that? Don't look at the headlines and base your decisions to buy or sell solely on the headlines and your interpretation of them. Be more aware of the market's reaction to the headlines. Obviously, the biggest level of importance for this market is that 26 to 2620 level, and then we've got all kinds of other areas where this market's going to have trouble, likely to have trouble if it tries to stabilize and rally. And again, wait for that 5-day moving average to begin to flatten out before you do decide to take any high-risk trades. The NASDAQ 100 was down 20 cents today. I don't know why these lines keep showing up here. Let's get rid of those. That was down 20 cents or 0.45%, and you can see that. Let's take a look at the 30-minute time frame. We're coming back down, close to what's been a very important level for this market, which is 43.50. That's where that rally from late or early this month developed from, as this prior level of resistance acted as support right in here. We had the market break this little pattern of lower highs and lower lows, and that's where we saw that strength develop last or a week ago Friday, and last Monday we had started to see late day selling that got us suspicious of this market, and then we saw it break down, and the declining 5-day moving average, it remains below. We have potential for resistance now at about 44.70, and of course this 45 level, 45 and a quarter rather, had been an important level of support on the way down here. So we've got a lot of reasons still to be concerned in this market. The 43.50 level is the key level, I think, in this market, the NASDAQ 100. Breaking below there could spell just another leg of basically, give up in here. And the path of least resistance does remain lower, so you have to be very careful and be aware that, the news and surprises tend to follow the direction of the trend.